Good morning, friends. I hope you're doing good. This is CA Manobha Verma. I'm sure all of you are doing good in terms of your practice, in terms of your preparations, and have been getting a lot of back-to-back practice, I believe. And today is yet another important session with respect to any organization when it comes to achievement of the objectives. That's budgetary control. So we'll be just kind of quickly doing a little bit of an overview initially, and then we'll be doing a lot of practice today. I'm sure everyone is ready for some uh, contribution in terms of your answering on the query panel or over here. I can already see some people on the query panel. Good morning, everyone. So, so guys, we talk about budgetary control first, right? So, the word is budgetary and control. So, if I talk about this topic itself, consists of two different terms. One is budget, and one is control, right? Good morning, Preeti. Good morning, Sushil. So, we are looking at the understanding of these two terms. Why budget is important? I believe this is one of the very first imperative steps for or towards the direction of achievement of objectives of any organization. I hope everyone understand this. Not only that, if I have to understand the term budget itself, it's basically a kind of a statement. It could be financial, it could be non-financial, it could be quantitative, it could be financial. The idea is that it is prepared in ahead of time, before time, which needs to be followed, pursued to achieve the overall objectives of any organization. So that means if I talk about overall process in terms of the budgeting, what does it entail? It includes specification of objectives. What does the organization want to achieve? Let's say they want to achieve at least 10 crores of turnover in four different regions for a particular year. So that would be the objectives. And how do I, achieve those objectives? I have to set the goals and targets for different regions over there: North region, West region, South region, East region. Accordingly, accordingly, the budget should be prepared. And we mention the objectives in terms of either quantities or in terms of finances. Let's say, for example, we are talking about number of units sold versus the turnover to be achieved. So that could have two elements here, right? We could have a number of units to be sold in quantity versus the selling price. So the budgets itself would be in form of combination of both the aspects. And we will be looking at the budgets with respect to the quantitative ones as well as the financial ones. Once we have prepared the budget, let's say we have prepared the budget for different regions for a particular period, we know that, okay, this is what my budgeted production statement looks like, or this is my budgeted sales looks like, or this is my budgeted income statement, wherein I'm targeting at a particular level of revenue. Looking for containing myself or different departments up to certain level of expenses. And this is my budgeted income statement. Once you have prepared the budget, you would have to keep that as a constant check when the actual operations start. What I'm trying to say here is we're talking about monitoring the actual results. We're talking about the monitoring the actual results. What do we say? Monitoring is not only I'm looking at the actual results, but I'm comparing regularly with the budgets. Now, when that happens, of course, there could be deviations, right? Not everything goes as per planned in life, except for the fact that we are all planning to become a chartered accountant, which we surely will with the leap of faith and the practice you guys are doing regularly. But yes, as per the real world, when we're talking about from an organization perspective, yes, the idea here is that there could be deviations from the uh, planned numbers. Your actual numbers may be different. Now, at that point, when we'll be looking at the identification of the deviations, it's very important that we evaluate how, where, what was the reason of the actual numbers being different. Sometimes what happens is, guys, let's say certain factors come into the picture later on, which we did not consider while preparing the budgets. Let's say some kind of a, some kind of a pandemic or some kind of a, market scenario, some kind of a government policy came up. And because of that, there is an inherent change in the actual results. What I'm trying to say is that, let's say you were talking about achieving output of 10 lakh units in a particular month. But because of some kind of a policy, because of some kind of a restrictions, you're not able to do that. Every month, your volume is reduced than what you budgeted. So when I'm identifying the deviations of actual versus budget, I will have to consider this factor. Do I need to revise my budget by any chance? Because what will happen is, let's say my overall volume itself falls down by 20% than what I thought at the time of preparing the budget. Do you guys agree that always there will be the deviation because of that volume? There will be always that particular factor coming into the picture if I want to analyze the variances. You guys know this, right? So it could be a situation where I know that, okay, a particular factor, a particular seasoning or particular consideration has to be kept into mind if my budget has to be revised. That is where we will be also discussing something called a master budget and flexible budget. What is master budget? Master budget is a fixed budget for a particular level of activity. But flexible budget takes care of those situations where your activity is going up or down, and hence it requires bifurcation of the cost into fixed, variable, and semi-variable. That actually facilitates the comparison here. Now, once you've done this analysis, once you've identified the deviations, time for some action here. So we're talking about preventive and corrective actions. What do you mean by preventive and corrective actions, guys? What is preventive action? You want to prevent something happening in future. Okay, you did not take something into consideration, or there is something beyond your control, or you need to improve the resources, machinery, materials, selection of vendors, could be anything. Whereas corrective actions is more or post facto. Preventive could be maybe for the next period to come, but corrective is of course post facto. That could be either in the actual operations or in the entire budgeting process as well. Very important that we understand the process aspects of budgeting as well. Why, guys? Because, my dear friends, if you see your past year papers, budgeting or budgetary control is a very, very important chapter. It generally has a direct implication of around 10 marks question. Uh, Mostly practical, but if you see, there has been theoretical questions as well coming in to the areas of budgeting, budgetary control, budget manual, uh, zero budgeting or zero based budgeting, and so on. So very important that we understand the conceptual part of it as well. Of course, in next few minutes, we will be doing a lot of practice today. So my agenda is that I'm just giving you a little bit of an overview initially, and then we will be moving ahead for some practice here. And I hope this is pretty much clear to all of you in terms of the budgeting steps. That's very, very important that we understand this in terms of uh, your overall objectives, in terms of your overall uh, monitoring, taking the corrective actions. So basically, when we understand these steps, we also need to know that the objectives of budgeting flow from these steps itself. Overall objectives is split into three parts. One is planning. As I said, budget is a statement that is prepared in ahead of time. So you're talking about identification of objectives, specifying the goals, and accordingly plan your operations in such a way. Because you have a direction now. You have a direction. Once you have done a planning, you have a direction. But for ensuring that you move into that direction smoothly, you need to understand that the departmental efforts or different units of an organizations are coordinated towards achievement of that common goal. But as I said, as we go on, as we go on through the path, we need to ensure that we keep a check. We keep a check. We keep a control wherever required, whether it requires updating a budget or it requires improving on the actual operations so that those deviations are not repeated here. I hope this makes sense to everyone, right? So, having said that, guys, it's important that we understand that control part of it in terms of the budgetary control. Of course, this not only ensures that you are having clear-cut objectives, you have that precision in mind, but it also ensures that different departments, different personnel have their responsibilities clear-cut lined out. It not only identifies the roles and responsibilities, but it also lays down a basis for comparison. Because as I said, we're talking about the actual needs to be compared with something, some yardstick. You have that with you, you have the budget with you. And that will push everyone, that will push all the departments to kind of do a optimized use of resources. Now, this is basically dependent on how strategically you are planned. Generally, when it comes to planning, guys, there are three levels of planning in every organization, and all the three have their own significance. One is strategic, one is tactical, and another one is operational. Why I'm correlating this is because we are looking at one of the objectives of a budgetary control in terms of a long range plan. And I'm splitting that into different terms because strategic could be long term, could be 5 years, 7 years down the line. Tactical is more of a annual plans, and operational is what you want to further, split that budget, split that plan into day-to-day activities, day-to-day operations. So what we do actually is at a strategic planning level, we have a long-term planning, but I think budgets are more aligned towards that long-term planning by implementing these two levels, tactical and operational, because most of the organizations would be preparing the annual budgets. Further, they drill down those budgets into various periods. I've personally worked in corporates in industry where I've seen that, let's say if a company is following a calendar year, January to December. So generally by September or October, they are finalizing the budget for the next year, guys. And not only do that, they split the entire annualized budget into various months, Jan, Feb, March, April. Why? Can anyone tell me why the tactical planning or splitting the annualized budget into periodical, small periods, monthly is important? Can anyone tell me on the query panel, please? First question from my side to everyone here. Why this is important? Preeti says check budgeted data with actual. Okay. So Preeti, let me repeat my question. My question is why it is important to lay down to split the annualized budget into smaller period of time. Let's say monthly. Let's say I said that okay, every organization prepares an annualized budget and they splits that into monthly targets, January, February, March, and so on. Any answers on the query panel here? Anyone here on Zoom? Sento, anyone else? I think as you guys respond, I have a very, very important. Sushil gave me the first response here to achieve short-term aim and objective. Very nice, Sushil. So Sushil says that long-term is split into medium-term. This is tactical, annual, and that medium is to short-term, day-to-day. But Sushil, just to add on to your point, can I say this short-term takes care of seasonal nature of the business? One of the very, very important factors here. Because in certain months the activities would be very high, in certain months the activity could be low. That could help you to move along towards the actual operations. Preeti, absolutely correct. But again, to add to your point, Preeti says breaking the big target into achievable objectives. But when we say achievable, we have to map it to the periodical expectations. Because let's say, for example, if a company is manufacturing air conditioners, so the demand in somewhere, most of the summer season regions in India would be from the month of March to August, September, I guess, right? That's the peak. Uh, Uni Krishnan, very good reply. More accurate control on actual performance, and that accuracy can be mapped with those expectations. Khushi says to compare with performance and if any deviation found modified, absolutely. And Sahu says to achieve our business target. Yes. So basically what I'm trying to say is that everyone is right in terms of the achieving those objectives, making that facilitation. But by breaking that into smaller periods is to also map the actual expectations, guys. So of course, the steps remain same. You have to first understand the strategic objective at a long-term picture, then break it into our analyze objectives, and then accordingly draw a plan periodically. Okay, some organizations, it's not necessarily that, okay, I always draw a plan for based on the monthly budgets. I could actually synthesis to control seasonal fluctuations and achieve short-term objectives. Absolutely. So sometimes what happens is we organizations can also prepare a budget or split analyze budget into regions, not only months. They can split into regions in north, east, west, south, or let's say some kind of product wise. Let's say an organization is dealing into four major products, so they can basically split the budget for each of those departments. Actually, it generally happens, right? When you are making an organization level budgets, most of the good organizations have a participative style where they take the inputs of various departments, and accordingly a master budget is drafted so that it is more from an acceptance perspective. It's very, very important to understand this part, guys, right? As I said, guys, there are various types of budgets. There are various types of budgets. We're talking about types of budgets. We're talking about uh, drilling down the budgets into some smaller versions, which is could be based on the period, as I said, long term, short term, current budget. It could be based on the capacity wise. I already discussed this, fixed versus flexible. So this takes care of volume fluctuations. But what is important for the flexible budget is it also needs the bifurcation, classification of the cost into variable, fixed, and semi-variable. Of course, in terms of the fixed budget, organizations also call it as a master budget. That's an organization level budget, but that is something that can be modified into the flexible budget if needed. But for me, when I talk about the initial definition of the budget itself, the quantitative statement or financial statement, that means budget can be operational, can be financial as well. And that is why we are drilling down this budget, right? Function wise. So we have to understand a lot of operational budgets that will seed the information into financial budget. What I'm trying to say here is, let's say, let's say at the end of the day, you have a budgeted P&L, budgeted income statement. You have budgeted sales. Now, where does this sales number come from? This comes from sales budget. You have minus COGS, cost of goods sold. Where does the information for cost of goods sold comes from? Cost of goods sold is what? What? We're talking about material, labor. So we're talking about a material here. We're talking about a labor, and we're talking about factory overhead. So what I'm trying to say here is that your financial budgets or financial budget statements, like a budgeted P&L, will be taking inputs from the functional budgets, guys, from the operational budgets. We're talking about from an operational budget. So that is very important. And one, okay, Preeti says, what is the difference between a financial and an operational budget? Because, okay, Preeti, financial budget is more in line with the financial aspects or financial statements. We're talking about what is the turnover level you are targeting, what is the, an overall profit budgeted for the particular period. Whereas operational budget is drilling down the same to achieve those targets. So basically, Preeti, let's take an example. Ideally speaking, what should be my starting point of budgeting? Let me ask this question to everyone, including you, Preeti. What is the starting point of budgeting in terms of the functions, in terms of the operations? Should I start with what my management wants for a particular period from a production standpoint? They have recently set up a couple of factories and they want to produce at least 20 lakhs units. Should that be the starting point or something else? What should be my starting point? Let's see the query panel. I believe starting point cannot be the production budget. Starting point has to be the sales budget, guys. Unless and until you do not get the forecast right, how can you plan your production? Preeti, are you getting it? So you were asking me about the financial and operational budget. So we are starting with the operational budgets, which are more of a driven functional wise. That will seed the information to your financial budgets. Financial budget means budgeted income statement, budgeted balance sheet, budgeted cash flows. For example, cash budget will be important for preparing a budgeted cash flow sequence, right? So it's very important that we understand the steps also. Like first has to be the top line. Industry use the term called top line. Top line refers to the sales. So sales budget ideally should be the first step. So how many units you're planning to sell? Based on the number of units you're planning to sell and the number of units you want to keep in inventory will decide how much units you need to produce. How much units you need to produce will decide how many units of raw materials you need to use, consume. Based on that, you will get to know how many units of raw material you need to purchase. Based on the production, you will get to know how many workers do you need. Based on the sales, you would get an idea about how much expense you are looking at towards selling and distribution. And parallelly, for the entire operations, how much capex do I need? Capital expenditure. I think guys, this makes a lot of sense to everyone. I am hoping that any questions, please let me know. Any queries? Any queries from the query panel or here on Zoom? So starting point is your sales, guys. That's very, very important here. Okay, before I go on to some practice, guys, one thing I would like to talk about. Just one more thing. And then we'll be doing a lot of practice. And I'm looking forward for a lot of practice and want your involvement, want your participation. I want you guys to be active today. So one thing I would like to talk about is there's something called zero-based budgeting, guys. Zero-based budgeting. Now, why this is important? The name tells us a lot of big stories here. Zero-based. Now, generally, what happens year on year, as the years go by, organizations prepare budget for every year, right? So 2024 budget would have been finalized. Let's say if I talk about Indian financial year, April to March. So let's say by December or January, the budget would have been finalized. Now for this year end, they will be finalizing the budget for 2025. And what would generally every organization would do? As I said, strategic planning would be in their mind. Okay, I want to reach up to that sales level by 2030. So my every year budget would be based on some predetermined thoughts, predetermined plans, objectives. I would have an idea. Okay, last year these were my units. Let's have 10% increment, 10% official, operational efficiency targets for this year. So this year budgets would be based on 2024 budgets would be based on 2023 sales. I want to reduce the cost by 10%. So a lot of things are more from a preconceived notion that I have something to look upon. And based on that, I'm preparing the next year budget. From 2023, I'm preparing 2024 budget. But that doesn't happen here. In zero-based budgeting, that doesn't happen. This is a time consuming, this can be complex, but this is important. Every organization at some period, I'm not saying every year, but let's say after every 5 years, after every 3 years, after every 7 years, should resort to zero-based budgeting. Why? Because it starts from scratch, guys. It starts from zero. It doesn't take into account any assumptions, any preconceived notions. You want justification for each and every item which is sitting in your budget here. You want every cost to be justified. See, generally what happens is various departments have historical experiences with the senior management. They know that, okay, there is always a scope or there is always a cut down from an approval perspective. So they incorporate those thoughts by adding some cushions. And that is called as a budgetary slack. Budgetary slack means like, okay, that okay, a particular department knows that top management will not allow, let's say if they need 20 employees, they would not allow more than 18. So from that perspective, they would always do a planning for 23 or 24 so that they get 20. They know that okay, top management will do a little bit of a cutting here and there. So the idea here is traditional way of budgeting allows some kind of a inbuilt embedded inefficiencies that is removed in zero-based budgeting. You're starting from scratch. For 2024, I'm not looking at 2023. I'm starting from scratch here. I want each and every cost to be justified. And then I relate to my discussion, which we had in activity-based costing. That will also help me to do activity-based budgeting here to understand each and every activity of the process and to understand and to justify every cost in terms of the benefits they will be giving to the entire process. Cost specifically like R&D, selling and distribution, that becomes under scrutiny here. So in terms of the advantages here for zero-based budgeting, it not only provides an opportunity to every level of management for a better allocation of resources, but it also removes the budgetary slack I was talking about. It also helps an organization identify any wasteful or expenses or that cushion I was referring to. So I believe while this could be time consuming, of course, every organization may not be able to do zero-based budgeting every period, every year, but every time, every now and then, or probably at some interval, this is a very, very handful exercise. Okay, so with that, is everyone ready for some practice here? Let's take up few questions, maybe one or two illustrations from your study material, one or two questions from your past years. So I'm trying to mix some practice question here, and I want you guys to be very, very active from this point. Let's target the first one on my screen here, and let's go through this together. And I want you guys to be with me. Okay. So we're looking at a single product company estimated its quarter-wise sales for next year as under. So we're looking at a quarterly sales given to us 30,000, 37,500, 41,250, 45,000. Opening stock of finished goods is given 6,000 units. Mind you, this is more from a next year perspective. Opening stock, basically the ending inventory for the last year, 6,000 units. Company expects to maintain the closing stock at 12,250 units at the end of the year. Production pattern is in each quarter is based on. So this is your production. As I said, guys, the top line or the sales is the starting line here, right? So the production is based on 80% of the sales of the current quarter and 20% of the sales of the next quarter. Company maintains this 20% of sales of the next quarter as closing stock of the current quarter. Okay, so that's a good point here. So you have an idea about every quarter what should be my closing stock. Opening stock of raw material in the beginning of the year is 10,000. Closing stock at the end of the year is estimated as 5,000. And each unit of finished output requires 2 kg of raw materials. Now, we are looking at the company proposes to purchase the entire annual requirement of raw material in the first 3 quarters itself. This is important piece of information. So in first 3 quarters, you are planning to do these purchases in this proportion. 30% in Q1, 50% in Q2, and 20% in Q3. I have also given the prices here. Value of the opening stock of raw material in the beginning of the year is 20,000. You have to prepare for the next year production budget in units, raw material consumption in quantity, and raw material purchase in value, and also a little bit of an idea about the store's ledger. How does it look like? So let's try to target this together, guys. I hope everyone has read the question here. Any questions? Anything anyone needed to check? Just looking at the query panel parallelly. So let's do one thing. So when we are talking about the very, very first item, guys, in terms of the first requirement of this particular question, how should we proceed? We are looking at production budgets in units. So that's my starting point. Let's do one thing. So we are looking at production budget first. So what should be your starting point, guys? Anyone like to answer this? What should be my starting point? As I said, we are talking about the sales is the starting point. For the production, we need to understand how many units needs to be produced in the next year. Any thoughts, guys? So the information which is given to us is the sales. We are talking about the production, and this is given to us for the entire year here actually, or entire year, but in terms of the 4 quarters. So what are the total number of units we are planning to sell throughout the year here? So we're looking at 153,750. Are we looking at these very number of units that to be sold in 4 quarters? Yes or no? So if this is my sales, if this is my sales, 153,750, what is the ending inventory I'm looking at? Ending inventory which is given to us is 12,250 here, taking from the question itself. And the beginning inventory would be 6,000. So sales plus ending inventory is the total number of inventory that we need. But we already have a beginning inventory of 6,000. So that's the production level we are targeting at. So we are targeting the production is how much, guys? 160,000 units. Please let me know if that is fine with everyone. So 160,000 is what we are planning from a entire number of units for the year. But when we're talking about from production perspective, we need to know we need to know the quarterly numbers as well. So let's kind of quickly put that into the entire quarter as well. So when we say production budget, let's talk about the 4 quarters. The same logic applies. So we are looking at sales units is 30,000, 37,500. 41,250, and we're looking at 45,000 here. What is the ending inventory organization needs to keep? Now this is important for every quarter. So let's go through the information again. Beginning inventory is 6,000. Beginning inventory is 6,000. So what do you think, guys? How are we planning this? Any inputs from the very panel? Let me see. Guys, come on, we need to respond. How do we know what number of units to be produced overall? So we know 160,000, but we are drilling down to the quarterly numbers now. Preeti says that there is important information given here is 80% of the sales of the current quarter and 20% of the next quarter. So can we drill down that way? So let's say for the production, what we do is We say that, okay, what is the 80% of the current quarter? 80% of the current quarter here, which is 24,000, 37,500, 80% is 30,000, and 41,250 into 80% is, so basically we are multiplying these numbers, is 33,000 and 36,000. So this is what we are looking at. And we're also saying 20% of the next quarter sales. So that means we are looking at this number 37,500 multiplied by 20%, that is 7,500. Similarly, this, right, we're looking at 8,250 and 9,000. So my question to everyone here is, what is the 20% of the next quarter sales for Q4? Who will tell me? What is the 20% of the sales here? We are saying 20% of the sales of the next quarter is the closing stock of the current quarter. That is one information given to us. And we are also saying the production is 20% of the sales in the next quarter. So my dear friends, if you are smart to identify the information in the question itself, can I say, since the closing stock is also 20% of the sales of the next quarter, which is given to us 12,000, 1250 here, that is really helping our cause here. Closing stock is given 12,000, 250. What is closing stock? Closing stock is 20% of the sales of the next quarter. That is also the production requirement here. So can I say this 12,250 can be directly taken from the question itself? Yes or no? All okay, guys? Hence, based on these numbers, you have a monthly production with us. And you guys can quickly check and confirm that are we getting overall production what we actually anticipated for the entire year. So if we add all these monthly numbers, I am getting 160,000, 1,60,000, and that's what we anticipated. That's the production we are looking at, 1,60,000. I hope everyone with me on this. So I think the production budget in units, that's the part one of the question is taken care of. Let me know, guys. Total comes to 1,60,000, yes. And hence we can move on to the second part, that is raw material consumption here. So second part here is raw material consumption budget in quantity, and then we'll be also moving on to the purchase. But first, let's talk about the raw material consumption. For the raw material consumption, what information is important for us? What information is important for us? The quarterly production, which are already calculated. That is what will be relevant. And if you go back to the call of the question, there's an information given to us somewhere at the bottom of this paragraph. Each unit of finished product requires 2 kg of raw materials. Do you think that is relevant for us in this case? That can give you a straightforward answer in terms of the consumption that is needed. If each unit requires 2 kgs, we already know based on this that, okay, the total consumption we need is 3,20,000. Wow. But we can probably do this multiplied by 2, 63,000. 76,500, 84,000, and 96,500. Just check the mathematical part of it, guys. 63, 76,500 plus 84 plus 96,500. So we are getting 3,20,000. What we were getting earlier was 1,60,000. So this pretty much ties with our consumption requirement here. So that's the consumption we needed. My dear friends, next part, which takes care of the purchase, that's what we need to be pretty much show. Interestingly, if I look back to the question here, which says raw material purchase budget in quantity and value. We may not be giving the information here on a quarterly basis, but we have some information in quarterly. So what we are targeting here is, anyways, we are targeting to purchase this over the 3 quarters. Am I correct? But first we need to identify how many units do we need to purchase. Please try to understand. So when I say raw material purchase, guys, let me remind you a very interesting correlation between what you guys know about your trading account versus when you are preparing these budgets. Like even for production, there is something I need to share with you. So let's prepare a simple trading account. I'm not preparing this in terms of number. I'm saying that, okay, you have sales here, you have an opening stock here, you have a closing stock here, and then you have a purchases or production depending on whether you are a manufacturing unit, production expenses, cost of goods manufactured. Now, what we do is, generally for production, what did we do? Generally for production, what did we do? Sales plus closing stock minus opening stock. That's what we did on the left hand side, guys. So basically, we are taking help of our trading account to understand the budget formulation as well. Sales plus ending inventory minus beginning inventory, that is my production. Similarly, can we use the same for the raw material piece as well? I think yes. I'm 100% sure you guys understand that part. That means what I'm trying to say is, if I use this trading account for a raw material perspective, so for raw material perspective, there is nothing called sales, but we know consumption. We know consumption, and consumption we have all calculated 3,20,000. 3,20,000. And we have also got ending inventory. Ending inventory of the raw material here is 5,000 given to us in the question. Beginning inventory is given to us in the question, 10,000. So can I say the purchases for the raw material is actually 3,15,000? Can I say that? Everyone with me on this? Let me know any questions. How did I arrive 3,15,000? We use the consumption. We use the ending inventory. We use the beginning inventory given in the question itself. Any questions on the query panel, please let me know. Kushi, Sahu, Sushil, anyone, sweetie. So what we can do here is, we're talking about the purchase, and we know that 3,15,000 is what we are purchasing. But very important is, every quarter we plan to do some purchases, 30%, 50%, 20%. That's the ratio we are given here in the question itself. So let's do this. Purchase. Three lakh 15,000 into 30%. We're getting a 94,500 in the first quarter. And then we're getting 1,57,500 in the second quarter. And the remaining in the third quarter at 63,000. Nothing has to be purchased in Q4. Nothing has to be purchased in the Q4 here. And the rates are also given to us. Right? So we need to know the raw material purchases in quantity and in value, guys. In quantity and in value. Hence, what we are looking at in this case, we have to just simply multiply the purchases price here per unit, 2, 3, and 4. And that's your amount. So 1,89,000, 472,500, and we are looking at 2,52,000. So in terms of the total purchases, we are getting 1,89,000 plus 472,500 plus 252,000. So that means 9,13,500 is the total purchase in terms of the quantity. 3,15,000 were the total units. I hope everyone doing good here. Any questions, please let me know. Preeti, Santosh, Kiran, all doing good on the query panel. Thanks, Preeti, for confirming. Now, the next part here is which talks about of the requirement, which is more with respect to your the store's ledger. I believe that is something you guys have already done in the previous chapters as well, right? Did we discuss something in materials? I think with me only you guys discussed the store's ledger when we're talking about the raw material issuance based on the consumption pattern, specifically when we are following something like a FIFO. What do you think, guys? So if I look at a store's ledger, how does it or how should it actually look like? Who will tell me? Let's have a quick idea. That means for the entire quarter, we need to do some workings. Are you guys with me on this? For the entire quarter, we need to do some workings in terms of what is my opening stock, what is my purchases, what is my consumption. And since we are talking about FIFO, we are talking about a lot of units, we need to consider that part as well. So let's do quickly move ahead and take care of our store's ledger requirement as well. So what you guys can see on my screen right now is a store's ledger. This is a store's ledger which takes care of the entire elements. But let me just quickly go through this with everyone here. So let's start our discussion on the Q1 node. Let's start our discussion on the Q1 node. Okay, just give me a quick second. Yeah. So Q1, we were given in the question itself that there are 10,000 units. 10,000 units are in the beginning inventory. Make sense to everyone? And they've also given in the question that the raw material in the beginning were priced at 20,000. So that means the price would have been 2 per unit. That's all given in the question here. So if I go to the stores ledger, we are saying 10,000 beginning stock, price 2 per unit, total value 20. So what we have done here from our purchasers here, 94,500 units at 2. So that's get added here. In short, in total we have a 1,04,500. However, consumption for the first quarter was 63,000 units itself. 63,000 units itself. So the consumption for the first quarter is 63,000. But interestingly, since the purchases and the beginning inventory are at same price, so remaining units can be at the same price or rather will be of the same price. So 94,500 minus 63,000, you are left with 31,500 plus opening stock. So rather, I would say the consumption would have first eaten up the opening stock. It's P4. Mind you, it's P4 here. So this 63,000 would first attack the beginning inventory and then remaining 53,000 here. So what you're left with is 41,500. at 2, that is 83,000, and that very logically will be becoming the opening inventory of the next quarter. Guys, everyone with me on this till this point? I hope the Q1 is clear to all of you. Any doubts here or on the query panel, please let me know. Okay. So next is Q2. Now Q2 may, of course, we have the beginning balance from the Q1. If you refer to your consumption budget, thanks, Kiran. If you refer to your consumption budget, we are talking about a consumption of 76,500, if I'm not wrong. But we have also made purchases. Purchases were made 50% of the yearly consumption, 1,57,500. But what gets tricky now is this unit purchase price gets changed. So we are talking about the fresh purchase is being done at 3 rupees per unit. So in total, we have 41,500 plus 157,500, which gives us a 1,99,000 units. 1,99,000 units. So 199,000 units we are consuming only 76,500. That means we will be still left with 122,500 here from a raw material standpoint. An interesting point is since it's FIFO and we are consuming 76,500, we need to be very, very careful. First, the 41,500 that goes out, and then out of the 76,500 minus 41,500, the remaining 35,000 are basically from the current quarter's purchases. So the opening stock is completely gone here, 41,500. 35,000 of the current quarter purchases also used. So whatever you are left is 157 minus 35. That is 1,22,500 are at the current year or current quarter purchases only. So 122,500 at the rate of 3 is your ending inventory, and that goes to be the beginning inventory of the next quarter. I think this is very interestingly self-explanatory though. And accordingly, you can add the purchases for the Q3. Look at that. The Q3 purchases were 63 units at 4, and the consumption from our consumption data is 84,000 here. 84,000. So if I look at Q3 consumption, it is not even exhausting our opening stock. So entire 84,000 is coming from 122,500. That means ending stock, ending inventory is basically comprising of two lots. One from the opening balance and one from the current year purchases. So entire current year purchases are untouched. But even from the opening stock of 1,22,500, wherein you have only consumed 84,000, so we are left with 38,500 from the opening inventory as well. So you have two lots here. You have two lots. One is the Q2 purchases and one is the Q3 purchases. I hope everyone with me on this. All okay, guys, for the Q3 data? Okay. Now let's look at the Q4, last quarter. So my ending inventory becoming the beginning inventory here. And then are we doing any purchases? Interestingly, no, because remember, the purchases were done only in the first 3 quarters. The entire purchases were Q1, Q2, Q3. So no purchases coming in here. That's blank. And the consumption was, the last quarter consumption is 96,500, my friends. That's where you need to be careful that when you're issuing P4, out of 96,500, firstly, we are targeting the earlier Q2 lot. So 38,500 So 96,500 minus 38,500, you're left with 58,000 that will be touching base upon the Q3 purchases. So that's the reason when we're looking at the ending inventory is only 5,000 units. That had to be the case anyways. We anyway started using that 5,000 units, which was given in the question itself. But what is important for us is since we're following FIFO, that 5,000 units are at the latest purchase price of 4. That is my amount will be 20,000 here. Guys, I hope the material stores is clear to everyone. Please confirm. Okay, so that's take care of the first illustration itself. Preeti says for big entries, these methods are very time consuming. Preeti, very interestingly, the if you talk about big entities, they're anyways ERP based. A lot of things are anyways automated, interrelated. So there is a coordination amongst various departments. ERP, they're having ERP softwares. So actually, of course, the time consumption is with respect to the coordination, setting up those limits. But when it comes to the drafting these budgets, it really, it's not as cumbersome, but yes, it takes time because you have to coordinate the different departments and take the entire inputs and then prepare a master budget, right? Okay, so guys, let's from this basic illustration, let's move on to a couple of brain teasers. So a couple of MCQs on your screens. So make sure that you guys mention the question number. Question number one is this, question number two is this. So along with your answers, I want question numbers to be mentioned. Preeti, is there any alternative method in place of this? Preeti, in terms of preparing the stores ledger? No, stores ledger has to be detailed, right? Stores ledger has to be detailed. So a couple of questions in front of you guys. You give me answers along with the options, question numbers and the options. Let's see. Any answers on the query panel? Sweetie, Soni Krishnan, Sahu, Kushi. Everyone is unanimously giving me a question number one answer here on the Zoom, which is very, very basic, which I believe you guys remember the discussion where when we talk about a company wishes to establish a factory overhead in which estimate cost can be achieved directly from the different activity levels. So I think this is important, right? Estimates of activity levels is the keyword here. And for the different activity levels, I told you it's not the master budget, it's the flexible budget that is helpful. Because there you need to know the driller of the cost. So option number C is absolutely correct, guys. Very nice. So option number C is good. So what about question number two? Question number two. Come on, guys. We need to get the answers in the query panel as well. Only Krishnan, Sweetie, Khushi, what are your answers? Others, Kushi. Only answers I'm getting here is in Zoom, but here I'm kind of getting a couple of different answers for question number two. So that makes it clear interesting here. Make sure you understand the call of the question clearly. A favorable budget variance is always an indication. I think for me, the key word is this word always, an indication of efficient performance. Always. Right now, I've got A, B, C, all three answers. Even for D also. After this, we are heading towards one of the past years questions that we'll be solving together. Okay, let's discuss this, guys. A majority is moving towards the right direction, it seems, though. Let's see. A favorable budget is always, a variance is always an indication of efficient performance. Do you agree? The first point is favorable variance indicates saving on the part of the organization, hence it indicates efficient performance. The problem for me here is, let's say, your raw material consumption budget was 20 lakhs and you have consumed only 16 lakhs. Would you be happy? Wow, you have consumed less. But guys, don't forget, there could be saving, but that saving could attribute to the activity levels also. You have to see what is the activity level we are referring to. So I don't think, first of all, that it is always the case. It may not be always efficient. We have to first see that if 20 lakhs of consumption was at 100% capacity, and we're actually arriving at 80%. So that means the budget itself is 16 lakhs. So that means there is no efficient performance here. So I think, first of all, we have to question the question itself. Is it always? The answer is no. And hence, in that case, option number A and B are gone out. But if you look at option number C, it says a favorable variance does not necessarily indicate efficient performance because such a variance might have been by not carrying out the expenses mentioned in the budget. That means probably you are not reaching at that expense, capacity level itself. So option number C is the correct one, guys. And there are few people who said C, but there are one or two people who said A and B as well. Is it clear to everyone? Clear to all of you? Question number two, guys. Specifically, people who mentioned A and B. Yeah. Okay, guys. Let's together attack a question which reflected in your recent exams. And I'm sure morning time, everyone is full of energy, but some people are energized because of some hot beverages. Some people like tea, some people like coffee. So this question are, rather this question is having something or the other for everyone, right? Everyone can see my question here. So anyone wants a hot coffee or any juices, all for you, but let's target this together. So HL Limited produces and sells four varieties of beverages. Past data shows different demand patterns across different quarters. So the sales quantity and the selling price here are given to us for all the, or rather for September actually, for all the four beverages. So you can see hot coffee, cold coffee, fruit juice, carbonated soft drinks. I remember whenever I look at this price list of hot coffee and cold coffee, I remember one of my friends, uh, couple of friends rather, was sitting in a restaurant and one person asked for a hot coffee and one person asked for a cold coffee. But the friend told to his friend who was having a hot coffee to have the coffee fast, to finish it fast. Can anyone tell me why? They were having long conversation, but one of the friends got worried. They objected to the guy who was having a hot coffee to finish it fast. Any reasons why they were requesting him to finish it fast? And nothing to worry about, just a simple PJ here. Because if the hot coffee turns out to be cold, the price is higher, right? So, but that's not the real world. We are talking about the world where we are talking about budgets here, right? Kiran has a right answer. It will become cold. Yeah. The cold prices are higher here, 40 rupees per coffee. So you guys can grab a coffee. We'll have a break after this question. Don't worry. So, so for the quarter October to December, so this is the data for September, guys. This is the data for September. For the quarter October to December, it is estimated that due to climate changes, demand for hot coffee would increase, of course, in winters by 50% of the previous month, and the demand for cold coffee would decrease every month by 30% of the previous month. Now, the demand for fruit juice would decrease by 20% as well in the month of October, and thereafter it will remain constant. That means for fruit juice, there will be, so for hot coffee, what we're saying here is, so hot coffee is increasing, increasing, increasing. Cold coffee demand is decreasing, 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 but fruit juice will be decreasing only once. And they've already given the units for the carbonated soft drinks also, right? For all the 3 months. They're specifically given 60,000, 50,000, and 30,000. There will be no change in the selling price of the products. Good. Standard quantity of closing stock for the period of September to December is given for all the 4 products. And what we are required to prepare is the production budget in units and sales budget in units and sales values. I think it looks to be a very, very straightforward question, to be very honest, on the looks of it. But you have to be careful in terms of there are too many numbers. There are 4 products. There are 3 months. So I believe that makes it kind of a little bit of a calculative question. So make sure, sometimes what happens is the questions look easy, but you have to be very careful. Don't be complicit, right? So everyone ready to do it together here? I hope everyone ready for targeting it together. Perfect. So we talk about the first requirement here is the production budget. Let's move ahead and draft a production budget here. We'll talk about the units first. Right? That's our requirement. So I believe you understand that in this scenario, we are looking at the 4 products. 4 products. So how do you do? So maybe we have to go month by month. That's the only choice we have, right? So let's make few columns here. So we have first product is hot coffee. So let's use this. Give me a quick second. I think my screen is, yeah, hot coffee, cold coffee. We're talking about soft drinks or other. First we have fruit juices, right? And since it is for all the 3 months, right? The requirement is for October, November, December. So let's first target for October. Mind you, we are calculating the production here. So always remember the thing I told you. If you guys are driven away or kind of troubled with some formulas, do not worry. Ease out your pressure. Always remember your trading account here. These are the sales. This is my closing stock. This is my opening stock and this is my production. So it's always very easy to understand that, sales plus closing stock minus opening stock. That's what we do, right? So first, let's target for the sales here for the month of October. Sales. I believe we have told the hot coffee would increase by 50% of the previous month, right? So 1,40,000. Guys, please check. Let me know if you guys are okay with this. 2,10,000 should be the hot coffee then. And cold coffee is demand is decreasing 30%. So 3,40,000 minus 30%. Let's mention this here in the question itself, rather in the top somewhere for our reference. So this is going up by 50%. This is going down by 30%. Just give me a second. So 3,40,000 minus 30% seems to be 2,38,000 here. Okay. And then we are talking about the fruit juices. Fruit juice is only decreasing 1 mix, right? So 20%. So I think we do not worry about that. 420,000 minus 20%, we are looking at 336. And for the drinks, they've already given us the number 60, 50, and 30. So we can use that. And let's add the ending inventory. So ending inventory is what we need for October is this line 15, 14, 12, and 5,500. Let me know, guys, if everyone with me on this till this point. Is everyone with me on this? That means total units needed is the total of these two. So 225, 252, 348, and 65, 500. Of course, we already have something with us in the beginning inventory, which is given to us. So ending inventory of September becomes the beginning inventory of October. So 12, 13, 11, and 7,500. Are these numbers we are getting here? 213. So we're getting 2,13,000, 239, 337, and 58,000. All okay till this point? Because if you're done, can we quickly move to November then? Let me go, guys. If any doubt is here, people on the query panel, everyone doing good. Hope you guys are noting it down. And maybe some of you guys are ahead of the game. That would be even more perfect. So November sales based on this, or rather, no, we need to calculate that, right? What will be the November sales for the hot coffee, guys? It is increasing by 50%, I guess. So 2,10,000 plus 50,000, sorry, plus 50%. So are we getting 3,15,000 here? Similarly, 2,38,000 for the cold coffee, which is declining by 30%, 166,600. Fruit juice had only one decline, so that remains fixed. And top drinks, we have given 50,000. I want everyone to be comfortable on the sales units for the month of November, please. 315, 116, 166, 600, 336, and 50,000. Similarly, we have an ending inventory here. Mind you, ending inventory for the November is also given to us 13, 15, 10, and 6. And we get to know the total units needed, but we also have some inventory in hands. So mind you, the ending inventory of the previous month becomes the beginning inventory here. 15, 14, 12, and 5,500. So that would give you the number of units we produce. It seems 313, 167, 600, 334, and this seems to be 50,500. Let me know if there are any calculation issues. We can correct it here itself. Or you guys are doing good here. Everyone okay with November, guys? And how are the friends on the query panel doing, guys? Sweetie, Unikrishnan, Sahu, Kushi. Any questions from anyone over there? I hope you got it. How did we arrive at the sales units for the hot coffee and the cold coffee? Because in the question it was given hot coffee with the season with the winter holding up, it's increasing 50% from the previous month's sales, and cold coffee declining 30% from the previous month's sales. So how did we arrive at 1,66,600 for cold coffee, 2,38,000 minus 30%? People on Zoom, Sayanto, Santosh, Preeti, Kiran, all are okay. Thanks, Uni, for confirming on the query panel here. I believe if everyone doing good here, let's kind of move on to the last one to December. So December month, we again need to get a sales up here, 315 again, increasing another 50% here. Another jump of 50%. So it's a peak of winter here in December. I'm getting 472, 500. You need to check. Is it the number you are also getting? Then 166, 600. Again, the cold coffee is slightly on decline, minus 30%. I'm getting 1 lakh 16,620. Thanks, Preeti. I think the fruit juice remains same, 336. And soft drinks was given in the question at 30,000 to us. So the soft drinks number are given here, 60, 50, and 30. So now we need to know the ending inventory for December, guys. December 11, 16, 13, and 7. And we also have a beginning inventory, which is coming in from the previous month's ending inventory here. So 13, 15, 10, and 6,000. Let's quickly jot down the production then. 470,500 for hot coffee, 1,17,620 for cold coffee, 339 for fruit juices, and 31,000 for the soft drinks here. Hmm. So I think I said probably the question is very straightforward, just that a lot of calculations needs to be done, and you do not need to miss out these, right? I hope you guys are doing good here. Mind you, there is one part of the question further. The question had two requirements, mind you. One was a production budgets in units, and there is second requirement, which is a sales budget in units and sales values. Wow. We have already done half of the work, I guess, if you agree with me. For the sales budget, we have already done half of the work. What's that? We have already calculated the units, right? So we already know the units. We can probably do it quickly. Is everyone ready to compile the sales budget with me? So let's do this. Sales budget. Now let's do one thing now is let's make for the periodical, that is October, November, and December. So why I'm doing this is we know the quantity already. We just need to know the amount as well. So let's do one thing for each of the month. We mention quantity and amount. So we have beverages. First is hot coffee. I think we are talking about hot coffee is 210 and we're selling it for 20. So are we looking at 42 lakhs here? Just double check guys for the calculation piece. We're having a cold coffee. And cold coffee is something we discussed already. 238 if I'm not wrong. We have a 238 into 40. We're getting 95 lakhs, 20,000. And then the fruit juice, 20. I think we had 336 if I'm not wrong. Yeah. 67 lakh 20,000. Guys, let me know if you guys are aligned here, and maybe we can just quickly add the total sales for respective months of this quarter. I'm getting 2 crores 4 lakhs 40,000 here. No, I think one is missing, right? We are yet to do the soft drinks also. Give me a second. So let me add that. We missed the soft drinks, right? What was the soft drinks part? 20. Yeah, 20 here. And for soft drinks, what are the units we are given? 60,000, 50,000, and 30,000. So let's incorporate that also. And then we will add up. So we're looking at 12 lakhs here. Guys, let me know if you're missing anything. 2 crores 16 lakhs 40,000. I think now it looks better. Everyone okay here? Perfect. So let's quickly use the November quantity also. We did a lot of efforts, right? Already. November quantity was 315, 166, 600. 336 and 50,000. So 315 into 20, we're getting 63 lakhs. 166, 600 into 40, we're getting 66 lakhs, 64,000. Then this remains same, and this is 10 lakhs. Hmm. Let me know, guys, any doubts? I'm getting 206 if I'm not wrong, not 216, 206. Let me know, guys, if this is making sense to all of you. All okay till November, guys? So if all okay till November, we can quickly look at what happened in December as well from a sales perspective. 472, 500, 116, 620. This remains same, and this was 30,000. So 94 lakhs 50,000, 46, 64, 800 here. This remains same. Is just double check. Of course, we have read the question carefully. The very important point was that there would be no change in the selling price. So make sure that if a question can come in a different format where they could give you a different selling price for a different month. So be cognizant. In this case, it is not changing though, right? In this case, it is not changing. Just be careful that you guys make into note that okay, there could be a scenario where some information may change the calculations here. So the fourth quarter, I'm getting 2 crores 14 lakhs 34,800. Rather, December month, not fourth quarter, December month. Is everyone with me on this? I think that takes care of this question here. Guys can go back and see if there was any other requirement of the question. I guess we're done. We were talking about two requirements. One was production budget in units, and one is sales budget in units and the sales value. Everyone has noted the solution here. Perfect. So guys, I can see it's already 8:29. I believe everyone would be needing a quick break. So let's do one thing. Let's take a break of 10 minutes at this stage. Once we come back on the other side of it, a lot of questions more for your practice here. So do some more questions, some more brain teaser waiting for you on the other side of the break. Let's take a quick 10 minutes break here. See you after 10 minutes. Welcome back, guys. So let's resume our discussion. I hope everyone back after the much needed break. So what we are looking here now is a brain teaser on your screen. So let's see if we can attack this. Waiting for our answers. So Preeti, Santosh, everyone. Brain teaser Fun Chips Limited, not Fun Clips. Fun Chips Limited plans to sell 80,000 bags of potato chips in June. Each of these bags require 5 potatoes. Based on the below data, what number of units of raw material should Fun Chips plan to purchase here? They're giving you some information about the bags of the potato chips. The requirement is for the raw material, which is nothing but potatoes. So, quick question for everyone. Options in front of you. Let's see who gives me the answer first in the Zoom and in the query panel. This one requires a little bit of a calculation, but if you are careful, you should be doing good. We have four options here. How are people on the query panel doing? Any questions, Sweetie, Sahu, Sushil, all okay at your end? I hope you guys are in the middle of the calculation. Okay, who's the one who's answering the this one on the screen? The first answer, I'm waiting for that. Kiran, Sento, Santosh. I hope you guys are not confused, but got the starting point at least. Okay. If you guys are stuck in something, let me know. If you've got an answer, please those answers. Anyone who is stuck, actually not sure how to proceed this based on the information given to us? Preeti, what about you? I hope everyone understands that when you're asking in this question, okay, Preeti says no idea. Okay. Let me then walk through everyone, guys. If you guys are a little confused here, what is the requirement? What is the number of units of raw material should Fun Chips Limited plan to purchase? Purchase of raw material is a requirement here, right? Now, purchase of raw material will be dependent on what? You would need a consumption of raw material plus inventory levels. Inventory level is given for us potatoes. But this consumption depends on how much is the production of finished goods. Yes or no? And what is my finished goods here? Potato chips. So we need to know as a first point how many chips need to be produced. How many packets of chips? I'm sure people like various chips, right? Like for example, my favorite chips of all time has been Uncle Chips. I don't know about you guys. So how many chips we need to produce here? How many packets of chips or bags? Now that depends on production depends on sales and inventory. Preeti, Santosh, is it giving you a ray of hope now? Is it giving you a direction now? So for the potato chips, for the finished goods, give me a quick second. Yeah. For the finished goods, which is chips for us, how much is the sales given to us? 80,000. How much is the ending inventory? Desired ending inventory for chips? 18,000 bags. 18,000 bags. And what is the beginning inventory you have? 15,000. So that means how many units need to be produced? So production is for 83, if I'm not wrong. 83,000 units needs to be produced for chips here. And if you guys are with me for 83,000, for a 83,000 production, remember there was an information given that each bag requires 5 potatoes. Interesting information they're telling you how to make potato chips. I hope no one is feeling hungry here. 83,000 into 5 is 4,15,000 potatoes that needs to be consumed. So consumption is 4,15,000 of potatoes, guys. So if I talk about the raw material here, which is potatoes, can start with the consumption, which is 4,15,000. We can add the ending inventory, which is desired 23. And we already have a beginning inventory here of 27. That's giving us something we were looking for. 4,11,000, my friends. The right answer in front of you, option number B. Was this that tricky question? Please honestly tell me. Someone who is a fan of chips should be able to solve it. Or rather, everyone should be able to solve it, right? It's not a tricky question at all. Preeti says he reached 4,50,000. That's a good point. That's a good starting point, Preeti. It's just that after that, you need to just quickly just apply the same logic, right? That's fine. That's fine. Kiran also said that. Kiran, but now it is clear. Now is it clear to everyone? Kiran, Preeti, Satosh. So basically, we just applied the same process we did in the larger question, right? 4,15,000 is the consumption. So that means you need to calculate the purchase based on the. So remember my trading account technique. Remember my trading account technique. Okay. So I think with this, what we can do is quickly, can we move on to another question from the past year papers? Is everyone ready for that? So question on your screen now, right? So we're looking at a PQR Limited manufacturing 3 products, product X, Y, and Z. Output for the current year is 2,50,000 units of product X, 2,80,000 for Y, and 3,20,000 for Z. Selling price is, now this is interesting, I guess. Selling price of product X is 1.25 times of Z, whereas Y can be sold at double the price of Z. So that means a lot of control is based on Z here. We have to see the Z. Product Z can be sold at a profit of 20% on its marginal cost, variable cost. We're giving you some information for all the three products: direct material, labor, and they've also given you some information about what is the raw material used. It's same for all the three products. That's good for us. Wages are given as 4 per hour, and total overhead cost is 52 lakh 80,000, out of which 1 per labor hour is variable and rest is fixed. Wow. In the next year, it is expected that sales of X and Z will increase by 12% and 15% respectively. Y will decline by 5%. Total overhead cost for the next year is 55 lakh 8,000. So from a total perspective, it is definitely gone up. But we may be interested to see what is the composite of the fixed and variable here. Variable cost is 1 per labor hour, that remains unchanged. Okay, Preeti saying examiner is ready to blast our mind at first instance. Preeti, I believe that for all these questions, biggest advice I can tell you is to make yourself relaxed. I don't know how many of you feel that when you guys are practicing this question at your home, how many of you have this habit of a bigger question to make a note of the given information first? So when you read, first of all, read the question completely, guys. Read the question completely. Then, based on the requirement, also make a note of a given information somewhere. Even if it is part of the answer, no one is saying anything, you can mention working notes. You can make a heading working notes and give the given information and then start computing one by one whatever you need. But for the main answer, that is need to be from a presentation perspective, very, very important. So they're also giving you some more information. It is anticipated that all other costs remain same for the next year, and there is opening and closing stock. Or rather, I think what they're trying to say is there is no opening and closing stock. Or you can say that with no information given, opening and closing stock are same. Santosh is saying, sir, where we get these questions? Santosh, these are your past papers, I believe. The earlier one we did was from November 23. This one, let me check, should be from May 2023. Okay, Santosh. So I'm sure you guys go to your BUS portal and go to the past year papers, guys. Suggested answers section. You'll get to know these questions. Even there are more papers. We are just taking some sample here. Okay. So coming back, selling price. So in this case, we are saying there is no opening and closing stock. Selling price, even if it is there, they have not given any information. So we'll assume it is same or there is no, right? So selling price per unit of each product will remain unchanged. What is the requirement here? Prepare a budget showing the current position and the position for the next year, clearly indicating the total product-wise contribution and profit for the company as a whole. Wow. It's a quite a information we need here. But is it difficult? That is my question. I don't think so. But the best way to ease out the pressure for you guys, and I keep on requesting this, is maybe just to ensure that you guys are working on step by step. Note down the given information. That would be good. I hope everyone is doing good, guys. So can we start together here? I have a little bit of a feeling here based on the information given. I think some of you want to do something in terms of, you want to calculate something. What exactly do we need to calculate here? As a starting point, let's say. I'm sure you guys are itching that, okay, so where is the selling price given to us? There's a lot of information for the selling price. Can we do something around this? Okay, let's first do some play here. Let's try to play with the information. I can see this second paragraph. The selling price of product X is 1.25 times of product Z. Product Y can be sold at double. Product Z can be sold at a profit of 20% of its marginal cost. So, do you guys agree? If you get to know the selling price of Z, you can get X and Y easily. You know, the first starting point that you should be getting to know the selling price of Z here. And for that you need to do a marginal cost. So Z's material is given to us, wages is given to us. What we do not have is a variable overhead. Can we use the variable overhead? I think we can. So who will tell me how many number of hours each product, each unit of X, Y, and Z are taking? So the labor cost is 4 per labor hour. This is 16. So this will take 4 hours. Product Y is 24, 6 hours. And product Z will also take 4 hours. And look at this. The variable overhead is given as 1 per labor hour. 1 per labor hour, guys. Yes or no? So that means we can clearly note down variable overhead also, which is, I think, 4, 6, and 4 here. 4, 6, and 4. So for product Z, what is the marginal cost? 20 plus 16 plus 4. I'm looking at 40 here. And Z can be sold at a profit of 20%. That means 48. Amazing, isn't it? We get a profit of 48 for selling price of 48 for Z here. And for Z, we are talking about 48. That means X and Y here are pretty much easy here. So X is 1.25 into 48, which is 60. And Y is 200%, double 48 into 2 is 96. For me, this information, what we have just done, is very, very important here. We are looking at the selling prices here, 60, 96, and 48. Is this calculation clear to all of you? Because if you are arriving at this point, I believe your pressure is relieved. Someone was telling me, I think Preeti was telling me about, the examiner is ready to blast her mind. But Preeti, if you have done this part, do you agree that mind is relaxed now? Because you have a lot of information handy with you. If you know the selling price, you are actually in a good position because now you're actually preparing the budget for this year and the next year and also the contribution wise as well, of course. I want everyone to be with me, and then we can probably start preparing the contribution and the profitability as well. But mind you, we are talking about two parts here, first year and the next year. So let's go to the next page and let's start part one of the answer. What is my current position for the budget perspective? What is my current position from a budget perspective? So we know we have already done a working here of selling price X. So you guys can note that. Guys, please make sure whatever you have done is you guys make a working note for this. In your exams, you have to make a working note of this. Like for Z, you have to mention direct material, 20, direct labor, 16, and your variable overhead is 4 here. So that you guys get to know that, okay, how did we arrive at the selling price? 20% profit. So that is your part of your answer. That is your working note. That gives you a 48 selling price. Because now what I'm doing is, for the budget, we are starting with the selling prices, what we calculated. Selling prices we calculated was 60, 96, and 48. I hope you guys are with me on this. And we can take the marginal cost or variable cost as well. So marginal cost for X is 20 plus 16 plus 4, right? 40. Plus material plus labor plus overhead. In this case, we are getting 50, I guess. So Z, we are getting 40 again. So what we are getting is contribution per unit. Let me know if you guys are with me on this. If that is clear, we can obviously mention the total units with us. How many units, guys? In the first paragraph, they have mentioned the unit here. The output is 2,50,000, 280, and 320. Two fifty, 280, and 320. Hence, the total contribution, and let's mention the last column as a total one because we'll be needing that now, is 50 lakhs for product X, 1 crores 28 lakhs 80,000 for Y, and we had 25 lakhs 60,000 for Z. Total I'm getting here is 2 crores 4 lakhs 40,000 here. And to calculate the profit, we need to reduce the fixed cost. So I'm actually expecting you guys to tell me the fixed cost, please, here, or the fixed overheads, whatever you want to call it as, so that we get to the profit situation. Who will tell me the fixed cost here? This is 4, 6, and 4. Kiran says 47 lakh 52,000. So, Preeti, 464 is what? Variable overhead per unit, right? We need to calculate the fixed overhead otherwise. You're correct. 4, 6, and 4, but you have to multiply that, right? So Preeti is correct. Let's kind of do that calculation as well together. So let's make a space here at the bottom. So what is the variable overhead, let's say? 464 per unit, right? So that means 10 lakhs, 6 into 16 lakh 80,000 and 12 lakh 80,000. So if I add them up, I'm getting 39 lakhs 60,000 here. That means fixed overhead, the total overhead is given to us is 5280 if I'm not wrong. Minus 3960. So what we are left with is, I think 13 lakh 20,000 if I'm not wrong. And if that is the case, your profit is 1 crore 91 lakh 20,000 here. I want you guys to be with me on this. If you guys are done with the current position, then we can move to the next year also, because there are two parts of this question, guys. We are done with the first part. Hope we are moving together. We are moving in the right direction. Yes, Preeti. Any doubts on the query panel, guys? Only Krishnan, Sweetie, Sahu, Sushil, you guys are doing good. People who have been responding there. Okay. If you guys are doing good, we can probably move ahead and we can talk about the current or the next year's budget, right? Did not understand the bifurcation of variable cost. Kiran, good. So Kiran, okay, let me tell you that. Kiran, this is something which I did in the very first step. Did you understand the hours here? How did I calculate the hours? Labor wages per unit is given 16, 24, and 16. 16 rupees, 24 rupees, 16 rupees. And they've given you that the wages are 4 rupees per hour. So dividing the wages per unit divided by the rate per hour, you get the number of hours. 16 divided by 4 is 4. 24 divided by 4 is 6. And 16 divided by 4 is again 4. So you get the number of hours 4, 6, and 4. And they've given you that the variable overhead is 1 per hour. So that means your variable overhead cost per unit is 4, 6, and 4. That's what you have mentioned here. 4, 6, and 4. So 4 for with X, 6 per unit for Y, and 4 per unit for Z. And we have just multiplied that with the number of units. Kiran, is this clear now? Let me know. So the starting point, what you need to understand is the number of hours per unit. Yep. Okay, guys. So the second part of the question was, we're talking about current position and the next year's position for the product-wise contribution and the profit. Uh, what do you think, guys? For the next year, what could change? What could change? I believe contribution can change, right? We know the contribution per unit we have already calculated 20, 46, and 8. That will not change because if I look at the information given to us, the selling price is not changing, cost is not changing because they're saying all other costs will remain same. Selling price will will remain unchanged. So that means, can I say from the perspective of the next year position, the contribution per unit should be same? That is 20, 46, and 8. But the point is the units have changed, I guess. The units have changed. They're saying it is expected. I'm looking at this factor. The sales of X and Z will increase by 12% and 15%. Sale of Y will decline by 5%. So we are looking at 2,50,000 plus 12% here. Guys, please double check. 2,80,000 units of X and Y is 2,80,000 plus 15%. 3,22,000 and Z. I guess Z may there was a decline, right? 5%. 3,20,000 minus 5%, we are getting 304. And that's the only catch for the next year, what I can foresee here. Make sure you guys are aligned here. I'm intentionally doing something wrong and no one is stopping me. Okay, this is a common mistake you guys can do in the exam. I hope you are noting it. Make sure that the products are given in the correct order. They are telling you sales of X and Z will go up, not Y. No one is stopping me here. That means I'm okay with X, but I'm not okay with Y and Z. This is something which is you need to be very, very careful. Very common mistake which can be committed by the students. They do not see the, okay, which product is are it is not necessarily that these products are mentioned in the order. That's what I'm trying to say here. Just be careful on this note because they are saying Z will increase by 12% and there is a decline of Y by 5%. That means it's Y actually which should be going minus 5%. That is 2,66,000 here. I'm sure many people were just kept on noting and, kind of not even considering that, okay, what is going on here? Z is going up. So Z is going up by 12%. So that means Z is not going down. We are looking at 3,58,000 or how much? 15%, right? So 15% comes out to, give me a second, 3,68,000, right? 3,68,000. So make sure you are very, very careful on this. Do not swap. Do not swap. Okay, once we have the contribution, we can quickly multiply this and arrive at the total contribution here. It's giving you 56 lakhs here. 2,66,000 into 46. 1 crore 22 lakh 36,000 and 29 lakhs 44. I don't know what's the total contribution you guys are getting, but I'm getting 2 crore 7 lakhs 80,000. Thanks, Preeti, for confirming. Let me have a look at the query panel. Any doubts from anyone? Okay. Joshua has a question regarding my timing due to work as well. I'm not able to attend live classes where I use recorded sessions. Uh, Joshua, that's up to you. I think I would obviously recommend the latest sessions, but the recently what you have seen is there are a lot of practice going on these sessions and there are more concepts in the previous classes. So maybe it's up to you. If you see that okay, you need to know more concept, you can go for the previous one, or more practice, you can go for this one. So Joshua, that would be my advice. If you're already good in getting the concepts, you need some more practice, you can watch these sessions as and when you can. But yes, recorded sessions are fine. Okay, guys, after this, I think now I would like to have your help in terms of telling me what would be my fixed overheads. Some people may say that it is same. I would still say it is good to check. Number of units have gone, number of units have changed, right? So make sure, do not assume here. You have to calculate the fixed overhead. Whatever it will be giving you the profit. For that working, what you need is the variable overhead here. So variable overhead per unit was 4, 6, and 4. So total variable overhead we're getting as 11 lakh 20,000 here. 15 lakh 96,000. Mind you, why we are using the same units of the sales here? Because there is no opening or closing stock. Santosh, I told you that these questions are there in the BOS knowledge portal. You can go to the ICAI website. There you can select suggested answers section. You will not only get these questions, you will also get the answers along with that. But I would personally recommend you guys to solve on your own and then compare with the answer. Santosh, make sense? So my total comes out to be 41 lakhs 88,000. Just double check there's the arithmetical part of it. And I think in the question they have given a different total overhead number for the next year, which was 55 lakh 8,000. So that means my fixed overheads is 55 lakhs 8,000 minus 4188. So that means we're getting 13 lakh 20,000. Isn't it the same number we got for the last year? Let's check that. Even the last year we had a fixed overhead. So I think, as I said, we cannot assume that, okay, the fixed overhead stays same because there are a lot of things changed. It's important to check and do your own calculation. It could have been different also. It could have been different also. So 194 60,000 is the position for the next year. That's what we are getting here. 1 crore 94 lakhs 60,000 is what I'm getting. Everyone with me on this? Yes, can you please confirm if there are any doubts in that matter? Right. Yes. Now, quickly, what I would like to do is just give me a quick moment. Any questions on this one in the meantime? Just looking at the query panel as well. No. Uh, any questions from people here, guys? Let me know. Anyone want to ask anything? Santo, Kiran. If not, I would like to quickly go through one more thing, guys. That is, in I think towards the end of your chapter, there's something called budget ratios. Now, these ratios are also very good, important for our exams. Some ratios like efficiency ratios, activity ratios, even the actual capacity ratio is very important. So, how to interpret these ratios? For example, efficiency ratio, standard hours upon actual hours into 100. So, if the ratio is more than 100, is it good, or is it the ratio is less than 100? It's good. I guess if you take less actual hours, the efficiency ratio, so the ratios ideally should be more than 100%, right? Favorable ratio should be ideally more than 100%. That's an idea here, right? So make sure that you guys are aware of these formulas. And what we'll do is, before we end, we'll do one more practice question. I think that is from your study material only. So let's do that quickly. Should not take you more than 15-20 minutes, but I request you guys to hold on while we practice this quickly. And I would be needing your help here. So this is the question on your screen. Concord Limited. I believe, if I'm not wrong, that's the last question of a study material, question number 8. Concord Limited manufactures two products using two types of materials and one grade of labor. And we have shown an extract from the company's working papers for the next month's product A and B budgeted units, material consumption, standard labor hours, and the material cost is given 4 and 6. Labors are at paid 25. And look at this, overtime is paid 50% if you are working for more than 40 hours a week. Wow. And the target productivity ratio or efficiency ratio is actually manufacturing the product is 80% and there is a non-productive downtime, which is at 20% of the productive hours. So there's a lot of information which you may need a little bit of an idea about what you have learned in the labor, that labor cost. That is also important. So other chapters can also be related here. Uh, I remember one of the questions in past year papers was also that was a budget related question, but that was asking you that a question which used an understanding of theory of constraints, or the question was asking you how many units needs to be produced for maximizing the profit, and hence uh, draft the budget. That was the question in one of the past year papers. So what you need to do is you have to calculate the contribution per unit, and you have to see which is the resource which is limiting the contribution, which is limiting the production. Divide the contribution by that. Let's say the labor hours. So divide the contribution by labor hours. Which product is giving you the maximum contribution per that resource? So that is why that understanding of interrelationship between the chapters is very, very important. One chapter there is a question, you can have a knowledge coming in from another chapter also handy here. So there are 4-5 days weeks in the budgeted period here. It is anticipated that sales and production will occur evenly, so that's good, not to worry about the spread. And they're giving you the stock at the beginning is for product A, material X and Y, and ending stock for the finished goods and the raw materials given. And they have to calculate the material purchase budget and wages budget for direct workers. Everyone with me on this? Have a quick crack on this one. We'll not be spending too much time on this, but we'll just quickly try to understand what should be the approach. How do you want to attack this one? Let me know, guys. I want information. I want inputs coming in from you quickly so that we can tackle this in an efficient manner. So the first requirement is the material purchase budget base. Material purchase budget. So I think before we go to the material purchase budget, we don't you think we need to know the final the production actually? So if I talk about this using some space here for a working note, so calculating the production actually before we go to the purchase. So A and B are my products. How much units we are planning to sell here? I think 2,400 and 3,600 is my sales. Ending inventory is given to us is 4 days of sales and 5 days of sales. So what will be the ending inventory, guys? 4 days of sales. So we are looking at 4-5 days weeks in a period, right? So how many total number of days we are looking at here? 4 into 5, 20 days in a month. So 20 days. So if my sales is 2,400, so I'm talking about 120 per day. 2,400 divided by 20. 120 per day into 4. So I'm getting 480 is my ending inventory. 480 units. Similarly, for product B, if the 3,600 is the sales divided by 20, every day I'm looking at a 180 units. That means 900 is my ending inventory, guys. Is everyone clear on this? 480 units here and 900 units here is my ending inventory. That's what we need to calculate because beginning stock is already given to me. Beginning stock is already given to me. I was worried about the ending inventory. The beginning inventory is clear cut given to us of 400 and 200. We can quickly subtract that. Get to know the production here at least. 2,480 and 4,300 is I'm looking at the production of the finished goods here. 2,480 and 4,300. I need that. I need that for consumption and material purchase budget, guys. I hope you understand. For calculating the raw material part, we would be needing this. Because the requirement is material purchase budget, right? So if I talk about two materials are given to us, material X and material Y. Product A, so if you talk about from a consumption perspective, so product A would be needing X and Y, product B would be needing X and Y. How many units of A? How many units of X A needs? A needs, guys. You're saying 5 per unit here, and product B would be using 3 per unit. So 2480 into 5 here, we are getting 12,400. And for B, it's 4,300 into 3, 12,900 I'm getting. Similarly, for material Y, 2480 into 4, that's the consumption. This is given in the question. I'm not doing anything. I'm just taking the information from the question. Getting 9920 and 4,300 into 6, which is 25,800. So my total consumption is also handy here. 25,300 and 35,720. Please let me know if the consumption of the raw material is clear. Consumption of the raw material is clear to everyone. Kiran, Sayanto, Preeti, people otherwise watching. Any questions on the query panel? Information is given to you. You need to be just carefully apply, implement that information. Because now if the consumption is clear, we can attack. So we are talking about two working notes done. One is the production calculation, one is the consumption calculation. Now we can clearly attack the material purchase budget. So we're talking about X and Y here. So the consumption we got 25,300 and 35,720. We also need ending inventory, by the way. Now, this is interesting. Ending inventory again is, I think the consumption is per days. Look at this, 10 days consumption and 6 days consumption. So if I say 10 days consumption, don't you think it's actually half of this? Because 25,300, there are 20 working days, that into 10. So 12,650 my ending inventory here. Whereas for Y, 6 days consumption. So 35,720, there are 20 days into 6. I'm getting 10,716. Please let me know if this is your thought also. And beginning inventory, this is given in the question, 1,500. That should give you the purchase quantity. I hope you guys are doing good. All okay, guys? And I think from the question itself, we have a rate given to us somewhere. Yeah, 4 and 6, right? Material X is costing 4 per unit, 4 per kg, and Y is costing 6 per kg. So total amount is 36,950 into 4 is 1,47,800, and 45,936 into 6, we're getting 2,75,616. I'm just holding here for a minute because I want to ensure that you guys are doing good. You guys are with me. Any questions from anyone, please let me know. Okay, so if this is clear to all of you, Kiran, I hope it is clear. Sayanto, everyone else, great. Thanks for confirming. The second part was wages budget, guys. Now that's important for us, wages budget, because we have some information given to us. We have some information with respect to efficiency given to us. So let's try to create a wages budget now. For wages budget, I believe we already know the units though. Units we know, right? The production we calculated 2480 and 4300. And in the information they have given us how many units are allowed per unit, guys? 3 and 5. Look at this. 3 and 5. The total hours needed is how much? Total hours needed 2480 into 3, 7440 and 21,500. But guys, this is my total hours needed. But if you see the question very, very carefully, I want everyone to read the last paragraph at the left hand side. The target productivity ratio or efficiency ratio for the productive hours is actually 80%. It's not good, right? That means they would be needing more hours to give you this many units, yes or no? Efficiency is only 80%. So that means if I need 7440, I need more hours. So the actual hours needed will be divided by 80% here. 7440 divided by 80% is 9300 here. 21,500 divided by 80% is 26,875. So what we are trying to say here, guys, is if I work for 9300 hours, then I will get a productivity of 7440 hours. If I work for 26,875 hours, I will get a productivity of 21,500 hours. That's what it means. I need more hours because I need to produce 2480 units. I need to produce 4300 units of B. Are you guys getting me? Actual hours will be more. Efficiency is less than 100%. Not only that, not only that, they are telling you there is a non-productive downtime is budgeted at 20%. That means apart from this, you have to pay for abnormal time or downtime as well, right? So basically, you have to account for the non-productive time of 20% here. 20% of 9300 is 1860. 26,875 into 20% is 5375. So that means this is my total hours 11,160 and 26,875 plus 5375. I'm getting 32,250. That wages budget is actually important here. That means total hours for both the products is 43,410. My dear friends, some of you would be thinking 43,410, they have given you the rate here, multiplied by 25, game over, match over. But that could be a no ball, right? You need to ensure that you do not ball the last ball as a low ball here. They have told you there could be a possibility of overtime. We have to check if we are working for 43,000 hours, 43,410 hours. Did we work for overtime? How do we check? There is an information given here. 40 hours a week, 180 direct workers are there. So let's see what are the normal hours available. Normal hours available. So there are 4 weeks, 40 hours a week, 160 hours in a month, and there are 180 workers. 160 into 180, I'm getting 28,800. That means there is a overtime here. There is a overtime happening of 14,610 hours. Please, guys, because this when we talk about wages budget, we need to understand that this needs to be paid by 25, but this needs to be paid 50% extra. That means 25 plus 50%, that is 37.5, my friends. So if you multiply these two amounts, you will get the wages amount. I'm sure you guys are a little tired, but I'm sure you guys appreciate that this is a beautiful question here. Takes into account the budgeting element, takes into account a little bit of a learnings we studied from the labor chapter, takes into account of the ratios, then gives you the wages budget here. Is everyone with me on this? This is the last question of your study material and last question for the day. Preeti, that's exactly my feelings here. Preeti says that this is giving you a feeling of a full question, that, we did something great, right? So if you guys understand this, try it on your own and you get it correct, that means you guys are doing good here. Any questions from anyone? Because if there are no questions, we are done for the day. Any questions on the query panel? Any questions from Kiran, Preeti, Santosh, Unikrishnan? Okay, if no questions for the day, guys, I request you guys to go back, redo some more questions. There are more illustrations, more practice questions. Go to the past year papers, you know, do more and more questions based on the budget. And by this time, since it is one of the last chapters, you need to ensure that, okay, the budget question can have tricks involved from the previous chapters also. So that interrelationship is something you guys need to be pretty much aware, as I said. So wishing you all the best, guys. And you guys are doing pretty much good, fantabulous. Looking at the interactions here, I'm sure you guys are busy in a lot of practice here. Anyone wanted to say something?
Thank you very
I thought I
much.
heard. Yes, Santosh.
Thank you, sir. There is no
Most,
question. I understand
most
what you
welcome.
say, teachers. I
Most
understand.
welcome.
Okay,
Pardon?
okay,
Okay, I
sir.
thought you
Thank
were
you.
saying no questions. Okay, great. Thanks a lot. Thanks a lot, everyone. Have a nice day. Wishing you all the best of luck for your preparations and for your exams. We'll be in touch, of course. And keep on doing the hard work. Always remember the three shortcuts of the success, right? And I keep on telling, there are three
Yeah.
shortcuts of success: practice, practice, and practice. No other shortcut. Okay, guys, take care. Bye bye. Good
Thank you,
day.
sir.
Most welcome.
Thank
You,
you,
sir.
sir. Have a nice day.
Have a
You
nice
too.
day.
Thank you, sir.
Bye, guys.
Good night, sir.